Hello traders, welcome back to another weekly watchlist video. I hope you caught my last video where I broke down Nasdaq and S&P 500 in depth and showed you why we are set for a pullback. Now, when I talked about the pullback, I used Elliott wave theory to show you when and where the pullback can occur. If you look at the overall market move, then indeed that's what happened so far now. This price action shows you why technical analysis is important, and it goes beyond just drawing some lines on the chart. You have to have a proper understanding of the market and how it behaves and where it wants to go and where it can pull back. So these things technical analysis teaches you. It gives you the projection or the future of the price action, what might happen, and how you can prepare, how you can set up your trades going forward based on that information. Now, coming back to the market, we are in wave 4 of 5 waves of Elliott waves. Now, wave 4, usually the smallest one, usually covers half of the distance of the wave 2. The market will rally a little bit more towards the end of this month, but just remember, as Elliott wave theory applies to the bull market, it similarly applies towards the bear market as well. So once we finish this 5 waves of the bull run, we might see a major pullback in the market, both in Nasdaq and S&P 500. So just be ready for that. So that's about the brief summary of the market. Now let's get started with our video. Starting with the Nasdaq. Based on the strength of the market, I was expecting it to retest the 14,000 level, which is right over here, but we didn't even reach to there. As I mentioned previously, this is Elliott wave theories. In my last video, I mentioned that we are about to finish the third wave, and indeed that's what happened over here. When we reached to this point around like 13,750, close to that, we start rejecting, we start losing that strength, and we came down. Now if this is the wave 4, then it should be half of the length of this second wave. And if you measure this second wave, which was somewhere roughly around like 8%, and if you measure this move again from here, then we already covered the 4%, so probably around like 4 to 5% right over here, somewhere around here, these two lines that I drew over here. So wave 4 might complete when it reached to when it retests this 13,123.75 or 13,021.25, which is close to 13,000 level. So probably I can see like it can retest this 13,000 level. Now there is the one thing, we must hold this 13,000 level. If we break through that level, then we can quickly come down to retest this 12,500 level, and then it will start plummeting even further, because at that point selling pressure will be higher than the buying pressure. So that's the overall picture of the Nasdaq. I'm expecting it to bounce back from these two levels, but let's see what happens next. Moving on to S&P 500, it's a similar situation over here. Chart is a little bit choppy for the Elliott wave theory's perspective, and we got a rejection from 4301. Like that was the prediction even before I realized that we are in 5 waves. And when I was analyzing it, and when I was doing the fib projection from this level, from this recent high to the recent low, I figured it out that we might retest this 4,300 level, somewhere close to it, and exactly there at that point we got a rejection from there. Now in compared to Nasdaq, second wave of S&P 500 is a little bit bigger. So if you measure this wave, it's like 5%, 5 to 6% overall, but it's spread across multiple days. So if we consider the similar scenario, then probably we can see something like this. We can retest these levels similar to NASDAQ, and let me point it over here. So we can retest this 41.95 or 4160.75, but in general, at the most, we need to hold this 4000 level. Even if we get a pullback slightly more than the measure one, and we need to see the bounce from that hold of 4000 level and bounce from there. If that doesn't happen, then we can quickly break down 4000 level, coming back down to somewhere around like 3800, and beyond that, as I mentioned with NASDAQ, selling pressure will continue, and we will see more sell off in the market. There is another thing that I want to mention. In my last video, or like 3 videos ago, I mentioned about like dollar value or the Dixie, like current Dixie or the US currency index. Why it is important? If you remember, I mentioned that it is forming this bull flag, and it broke out nicely, reached to high of 109, then got a rejection from there. And when this happened, we started seeing the rally in the market. And if you noticed it clearly, we start breaking north of this another bull flag around like 15th August, and from that point onward we started seeing pullback in the market. Now this move is parabolic. If you do a fib retracement from this level, if it can retract back, then it will come back down to around like 106 to retest its previous resistance as a support, and this might complete that this might complete the wave 4 in the market. And when it start coming down, let me mark it over here, when it start coming down, we can see a 5th wave completion in the stock market. So these two, like dollar value and the stock market, they are inversely correlated. So this is a possible scenario. And if you look at this price pressure movement indicators, like this is a ppm 1, ppm 2 and ppm 3 that I got from the Kendall report, then what you can see here, we are about to penetrate this first and second derivative. And usually when that happens, let me add these projection lines. When that happens, usually this is a 10 period moving average, and when we break through the first derivative in ppm 1, we come back down to this 10 period moving average and retest it once again. So if that happens, if we get a rejection from here and penetration over here, then it can quickly come down to 108 107 level. Okay, and if dollar cannot hold this 10 period moving average, then it will quickly move to retest this 20 period moving average, which is in the red. And at that point, this ppm 2 will start penetrating through its derivative, first and second derivative. And at that point, this long term trend or ppm 3, this will start penetrating its derivatives, and at that point it will come back down to retest this 40 period moving average. That means, what I want to say in a simple term, this fib projections will give us the direction. It might come back down to this 106 level, which will complete this will complete the 4th wave, and this will complete the 5th wave in the market. And from that point onward, dollar will move even higher, and we will see the sell off in the market. Next one is VIX, and I was talking about VIX in last few of my videos constantly, and I said like VIX is not going to break below 19, and indeed that's what happened over here. It is also in a 5 wave downward. So we have this first wave, second wave, this is a third wave, and we are started seeing consolidation. Now that might happen for a longer period of time. We have to broke above this 20 this 21 level. Where exactly it is? Okay, somewhere right around here. So let me mark this box with a different color so you guys can see it clearly. So we are in the box, and this is a consolidation, and this is a little bit alarming because if we constantly see this consolidation, then probably it will break out even further. And based on the technical analysis what I have done so far, it seems like 23-24 level will be possible in this current form. Now if you see here, similar to the dollar index, we have started penetrating again through this ppm1. So that means we are going to see a retest of the 10 period moving average, which is right over here. So right, we are at 2062, so expect weeks to hang around between this level for a while, and let's see how it's going to pan out in next few days. But I think this will add more choppiness, more volatility in the market, and this sideways action might continues, or even if we get a breakdown below 19. I don't think so it's possible, but anything can happen. Right now I'm seeing the consolidation and move high from this price action. Next one is Apple. Apple had a strong move and we started seeing the pullback. Expect a pullback to 165 level, so that will be the max level, and you can clearly see the pressure, selling pressure over Apple. It's over here in ppm1, ppm2 and ppm3. So expect a retest of probably this 21 period moving average and 40 period moving average. It might not break through it, but it will definitely come back down to 165 and then bounce back again. At that point it will complete this third wave and then move higher a little bit, completing the fifth wave. Next one, Amazon. Amazon had this beautiful rounding top and it's an inverse cup formation. At this price point I'm expecting it to retest this 40 period moving average, which is at 135, and if we break through that, we can quickly come back down to retest the beginning of this gap fill, which is at 132. But if we reach to that point and if we see the continuation of downward momentum in the overall market, then it will start filling this gap, come back down to 130, 129 level, and then push and bounce back from there. So that's what I'm seeing here with Amazon right now. Both Amazon and Google, to be honest, I was expecting them to push quickly, similar to Tesla after split, but that didn't happen. It's just like slowly grind its way to a certain point, and then now it's trying to hold that level, but it's more evident that it wants to come down rather than going up. Etsy is in similar trend. Just watch for the retest of this 102 level. Below that we have a gap to fill between 100 and 98. If we couldn't get the bounce from this 102 level, then it will break through, fill this gap. At that point it will retest this 200 days moving average, which is in the white, and the recent part of it is displayed here in purple. I need to fix that code because I wrote that indicator by myself. So it will retest this 200 and then possibly curl back and come back up to retest this 102 level once again. At that point, that level will act as a resistance. Home Depot's chart is very interesting. After their recent earning, by the way, they beat their earnings and revenue by some margin, not by much, but it's okay considering Home Depot is in retail space. So we saw a breakout from this resistance level, which was a key level at 315. it reached as up to 330 level as high and started selling off from that level. If you see here, I marked this resistance zone or the supply zone in red box. So we started breaking from that level, breaking down from that level, and it's now coming back down to 315. Now if it can maintain this 315 level, then at that point it will retest this previous resistance level as a support and then bounce from there, something like this. So that's a more likely and more possible scenario. So just watch for this retest of 315 and hold of this 315 level. Holding is very important if we want to see this happens. Eli Lilly is quite interesting because even though they missed their earnings and revenue by quite a margin, it still rallied with rest of the market. And what I'm seeing here right now, we are seeing this PPM1 started penetrating this first derivative, and when that happens, as I mentioned previously, we will see retest of 10 period moving average, which is right here. And if you see its next move, it is going to come down to retest this 315 level. Okay, and at that point we might get a bounce back from there, because this level will act as a support, which was acting as a resistance for the previous price action. So I'm expecting this to happen similar to Home Depot. So watch for this 315 level. It's a major level to hold, so just keep an eye on this one. Next one is Lois. Very similar chart to Home Depot. Break out from this resistance level of 206, 207, broke nicely through that level, reached to high of 221, started selling off, and I think like it is coming back down to 206 for the retest, and the similar scenario will happen. Retest and rebound will happen, and if we break through this 206 level, then the next level to watch for is 204, 203, but at the max it needs to hold 200 for a bounce back up. Moderna sold off pretty aggressively after its earning, despite having good earnings, and that sell-off was quite aggressive and happened over the span of few days. Now what I'm expecting, if you see here, we have started curling back of this PPM is PPM 1, 2 and 3. They are started moving up. That means bottom is near, and I think like when we see this 140 retest or 133 retest, we will start curling back up, because this zone, let me mark it over here, this zone will act as a demand zone or the support zone. So I'm not expecting its price to fall below that, but all depends on the market condition, all depends on the healthcare sector momentum and all those things. Considering those things, just watch for this level 140, 140.04 and 133.20. Microsoft is having this micro head and shoulder. If you see here, this is left shoulder, head. Now it's coming back down to retest this neckline, and then it will form this another right shoulder, and I'm expecting Microsoft to come back and fill this gap, which is so from 286 to 283. It will quickly fill this gap. At that point it will probably retest this 40 period moving average, and then it will bounce back from there like this. Also, if you see here, this was a previous resistance level somewhat around like here, and we couldn't break through that. We broke through it partially. We tried to hold that level but couldn't hold it. Selling pressure was too high at this level. Let me mark it over here. And then we started coming down. Now the next level to watch for, if we couldn't get a bounce from there, is this one at 280, and we might expect you might expect to see a bounce back from there towards 283 pretty quickly. Netflix behaved exactly like what I expected it to do. I have mentioned about this big gap fill, and I also mentioned that it probably get rejection from this gap fill when it start penetrating this gap to fill it. Now we got that rejection from its 250 level, and where it is heading right now. It has this small gap to fill between 237 to 231. So right now it is bouncing off from that level, but I am expecting it to quickly fill this gap, retest this 200 period moving average, and then bounce from there to retest this 268 or 270 level. But if that doesn't happen, then we will quickly come back down towards this 205 level, and probably we will be back in this box again, which is highly likely considering Netflix is not a favorable stock anymore. They are losing their business. Their business model is crumbling down. Their shows are not that hot for people to come back and start their subscription. So their business looks like a little bit in the downtrend, and that might reflect in the stock price of Netflix. Next one is NVDA. This is a little bit interesting because their earnings are coming up on 24th August. We already know their future guidance. That's why we saw a quite sell-off during this period. So what I'm expecting here is it will probably come down even further to retest this 172, and beyond that 165 level. I think we might see a bounce back from there. At this current price, we are below all 3 period moving average like 10, 21 and 40. Also we are below this 200 days moving average, so that's a little bit concerning. We retested this over here, 200 period moving average over here, through it partially, couldn't hold that move, came back down, we retest it again, and now we start rejecting it. So this is a little bit interesting since we are below all 3 moving averages. You can expect if we get a bounce back, then the first thing that it will do is retest this 21 period moving average and 10 period moving average before retesting this 200 period moving average. So pay very close attention to NVIDIA because it might gives you some radical moves and opportunity to play on the both side. Next one is Tesla. As I mentioned in my previous video, we had a bull flag formation right over here and we broke through it. It retested this 930 940 level once again as I expected, as I mentioned in my previous video, but we couldn't hold that move. Now with the momentum behind Tesla, I was expecting it to at least retest 1000 level. We couldn't even come close to that level. We got a rejection from this 943 level and we started coming down, and right now we are retesting this 40 period moving average, and below that we have a 200. Other thing that you need to see over here is double top formation, which is a classic bearish, textbook bearish pattern, and what I'm expecting it to do is like it can come down to 840 before its split, which is happening on 25th August. Next one is Walmart, and Walmart is also forming this flag formation similar to all the retail traders like Home Depot and Lowe's. So what I'm expecting, because it's very close to this gap fill and we are very near to this 200 period moving average, I'm expecting it to retest this 200 period moving average. At that point, both 10 period and both 21 and 40 period moving average might come close to that 200 period moving average, and we might see a bounce back from there. So that's it about this video, guys. I broke down few important stocks in depth as much as I can to provide you more information about their price action and the next move. If you like this video, please give us a thumbs up and considering subscribing to the channel. It takes so much time for me to prepare this video because there are so many stocks and I go through all of them to see which one has a good setup. So if you really appreciate all the information that I'm sharing in this video, just show me some love by hitting that like and subscribing to the channel. Thanks again for the watching. Have a good weekend and see you in next video. Bye.